why hotels? The space is no longer at the nadir valuations that it was in September 2020. There's a smart bit of valuation re-rating that has happened. And it almost seems that everybody is greedy about this pocket. So why are you constructive on hotels?
No, thank you, Neeraj and the team at BQ. It's an honor, privilege to be on the debut show. And I wish you guys all the best and, looking forward to many more shows like this. So on hotels specifically, Neeraj, we are very constructive because there has been a complete turnaround post-COVID. And for the last time that the hotel cycle saw an upcycle like this was 2000 to 2008. And it looks like now we have got into probably a better upcycle. The reason being that if you look at the macro level data, at the organized hotel rooms, India has about 160,000 rooms, which is less than 1% of global rooms at 1.7 crore rooms. I mean, China has 40 lakh rooms and we have 1.6 lakh rooms. So there is a huge distance that still has to be covered, so that big macro factor has to be taken into consideration, that the demand is a multi-decadal demand. And at the same time, the supply is highly constricted. 160,000 existing rooms, 40,000 rooms coming up. And, the market is getting more and more consolidated towards larger players. And what this is doing is that there is an uptick in both average room rates and occupancy levels. The occupancy level that the industry has at 65% is probably higher than pre-COVID levels now. ARRs are definitely higher than that. And this is not stopping. You're looking at hotel chains now forecasting a higher than 50% EBITDA margin, which is probably the highest ever. So every which way we look at it, Neeraj, it looks like that pricing power is back because of demand supply equilibrium changing in the favor of the hotel industry. The macros indicate this is a multi-decadal demand environment. And, as the economy grows, the organized players are going to benefit. And I completely agree with you. Valuations have already priced in. But probably if you look at, valuation 3, 4, 5 years out, this is probably still a good time to look at the sector as a whole.